Yesterday, I told you that we'd most likely enter some type of bear trap, a little bit of a push down to start the week going into Wednesday. Now, we're going to talk about exactly what is happening with this downtrend and how we're breaking back into this and key levels you need to be watching. Before we get into that, to ask you to consider doing two things: liking and subscribing. Every single day, we are making these videos for you so you know exactly what's happening with the market, key levels to be watching, and which stocks to be looking at again every single day. Now, as we jump in here, what are we looking at? What were we really looking for going into today? Now, you have entered that area to where you have to be concerned now when it comes to the market. So what I'm going to do is come about to the 15-minute and show you exactly what's going on. So I've been bringing up previous levels, things like that, showing you the big areas of concern. Now, so far, you've been holding your previous highs. Okay, so as far as this, so when you're coming up, you'll come to the upside, you'll make your previous high right here, you'll double top, you'll push up, you'll come back down, bounce, come back down, buyers will step back in, you'll bounce right back above, right? So you keep getting bought back at your previous highs. You can go watch some of the previous videos. We've been talking about that heavily here. Now, things are shifting, right? You aren't getting the volume, so people are going to continue to say that below. I know you're going to say you're not getting the volume, whatever you're going to talk about, yada, yada, yada. I'll talk about that in a second, but you are pushing down below, and you're pushing down straight. So these are areas of concern now. And in my opinion, you are at the last line of support here. Now, I said yesterday I expected some downside, but I did not expect it all to come in one sitting. So when we look here, what's happening? Now, you came back to our key level right here, 12.9. If you were here when we broke through this, I explained to why this was such a big level and how this was retested. So you can actually see this 12.9 to 13,000 area on Nasdaq. You popped up, came back, retested, and then boom, you shot back up and hit 13.7. Now, I'm going to show you the S&P in a second, but when we look at this, this is your biggest level, and this is what you have to be watching right here. If you get back below this and you lose 12.9 to 12.8, in my opinion, you were in a world of hurt. So let me tell you exactly where I see us going. Let me get that out of the way real quick. I'm going to go right to about 12.5, 12.4. So in my opinion, if you come out tomorrow and you start breaking below 12.8, 12.9, really, it's going to be this 12.9 region. If you get below this region, retest, it's a clear shorting opportunity, in my opinion, right? I think you almost guaranteed to push down to 12.5, 12.4-ish. Now, from there, what are we looking at? Yes, some big key levels, and I don't want to get too far ahead of ourselves, but I am going to tell you there's some big areas I'm watching. The next one would have to be around 12.2, 12.3, but you have a lot of areas in between there, but the big next level is going to be 12.5. So if you break below 12.9 to 12.88, in my opinion, you'll have a straight shot down towards 12.5, 12.4, give or take. That'll be the area to be targeting. So you're already starting that descent, but I want to say this could still possibly be somewhat of a trap because one, you have not seen the volume, which I will say that's really important, but you have been breaking through key levels. Although I will say this is probably your biggest level when it comes to the NQ. Now, when we go to SPY, what's happening here? Again, there's kind of a lot happening here on the chart. I try not to delete too much so we can stay in tune and follow all the information that we've been talking about and show you the importance of these key levels. But I want to address that you got the test of 417 right off the bat on SPY. And we've been talking about this for a few days. But as you zoom in here, look, if you're looking at any of these types of trends, anything we're talking about here, and you're obviously, I know everyone's going to comment about the gap that was filled about this region right here. I'm not too concerned about it. I don't really care. But what we're looking for, this was a support we were looking to come test. I was mentioning 417, 416. That's what I was looking for to test before Wednesday. But the fact that you opened below that level shows a very large amount of weakness. So even if tomorrow you come out to the strong side, that area is going to be a big level of resistance, right? So I don't think you're going to just get a clean break on that on your first attempt. Now, if we go back to the 4 hour, I want to show you what's really happening here and why that level is so big. This dotted line, it's your highs that you had back here around August 5th through the 10th, give or take. And it was your highs you had back in the early June. And then it was the bottom of the level you had back in April. So this is a major area of confluence, which you can see happening right here. So the fact that you're below that is really big as well and has me looking and has me overall expecting a dip down to this 408 level down here. Right back down 408, 407. Again, where was that area? These all come back to previous zones that we continue to play here and continue to monitor. I'm trying to go fast so I can get through this pretty quick. Now, when we're looking at these areas, right, just look at how you're respecting the same zones, right? Same zones, once again, right here. You're just coming right back down to those same key levels, about the 407, 408 range. So that's what I'm targeting on SPY for the continued downside. Now, if you're going to get a breakup or start pushing back to the upside, it is possible you get a push up to 417. In my opinion, that'd be a shorting opportunity, hopefully to get that push back down to 409, 408. Now, before I go too deep into anything else, I want to talk about news and catalysts that we have happening this week. And if you haven't been on the channel, I recommend paying attention to what we're saying here and asking the good questions, okay? Ask questions on things you don't understand. Now, some people come here and they get upset because they don't understand things I say, and then they comment down below some hate. And I get it. If I'm saying anything that's wrong or misinformation, please call me out on it. I want to be called out. If I'm lying, if I'm wrong, I want to be called out on it because there needs to be transparency in this space. Now, when we've been here, if you go back to my video, I believe Thursday or last Wednesday, I said we most likely had a short-term top right here. But what did I say was going to be the most influential impact to that level? The calendar. Now, on Thursday and Friday, Thursday, you're going to have GDP. Friday, you're going to have your Jackson Hole meeting where Powell is going to basically address everything happening with the Fed right now. Very big meeting. But tomorrow, there's something that I did miss, and it was new home sales. Now, if you don't know, we've been talking here on the channel as well. People and your builders are coming out saying that we're quote unquote coming to this area of a housing recession. It has not started yet, so understand that no housing recession has started yet, and it's not even close to starting, but they're saying you're now seeing the early signs of it, or even calling this a recession now, which is a stupidity. However, that data comes out. If it comes out pretty bad, that could easily push us below this 12.9 area. So I don't see any real sign that you're going to get a push up right now. If you're going to get active pushing from bulls and stepping back in my opinion, that's going to happen around Wednesday. So we're sitting on the 22nd right now. So in my opinion, around the 25th to the end of the day on the 24th is when bulls will step back into play. Now, if we come to Bookmap, and I'm showing you the volume and everything happening here, I want to show you what's happened today on the market. So to start the day out, we had some very interesting behavior. We had actually green CVD, so follow this red and green line. As it flips from red to green, that means you're into an area of bullish behavior or bullish buying pressure when it comes to the cumulative volume delta. So this has been a great indicator for us. But when you're pushing down on your index, which just is the S&P futures index, so when you're pushing down here and you're remaining green, that's showing, in my opinion, that if any selling comes in, you're going to start falling rapidly. So I started grabbing some puts for myself in the Discord once we broke below 13,000, and that's where I started stepping in. And in Discord trades we took today, first one up was Jay Ream, absolutely slaughtered it here. So what did he get? Out of the gate Monday morning, 908, Nvidia 165 puts at 2.5, absolute killer entry. You had multiple opportunities to get into that trade. They ended up running to 3.4 and higher. They're going crazy, but I think they're going to continue running. For myself, what did I grab? I'm going to go over these in a second as well, but I ended up grabbing two positions. So I started grabbing Amazon 130 puts for September 3rd. Those got up around 15%. I haven't sold them yet. And then I got more USO positions, which is the oil play, which we'll cover here again here in a second. I just like to stay transparent no matter what here, show winners and losers. So that's what we're trading right now. So going into this, in my opinion, even though we saw some buying pressure on the dark flow and with this hidden order book, something that you're not going to see on level 2, I still believe in downward pressure. But again, I want to say this. I don't believe you're in this area when we come back to the market that it's just nothing but downside, okay? Yes, you're getting a pullback. If you go to the 1 day, 4 hour chart, whatever you want to look at, you're still getting a relative pullback to some of these other moves. However, this is a lot more red than what we saw back here. So you're definitely getting into that scary territory. However, again, I still have my puts except on oil, which I'll go into here in a second. But you need to be careful going into Wednesday because what I'm looking for still remains the same. What I said in my video yesterday, I'm anticipating downside into Wednesday. Once Wednesday hits, I have to anticipate a bullish GDP based on what commodities are doing and what is happening with the government as far as midterms. They want a bullish economy going into midterms. You can already look at Biden's ratings. Again, someone tried to say that I was lying about this. Again, it's a quick Google search. Biden's ratings are going up. It's just a simple Google search. You can literally watch his tracker go over any of it. It's literally been going up over the past few days. If we come into this chart, as you zoom in here, you can actually see going into July when the market was still kind of down, you were at 36% approval and it rose up to around 38%. And we've already seen news reports of it over 40% on certain polls. However, the disapproval is still it's still up there as well, but you need to understand where you're at. And you can see that you are getting more love, quote unquote, for the Dems and for Biden as oil prices dropped. Now, it's not drastic, nothing crazy, but they need all the help they can get. So what am I looking for going into Wednesday and Thursday? Now, this was a little bit of a curveball. I'm going to tell you right now. So if you break below this level, I'm anticipating downside to 12.5, 12.4, give or take. That's what I want to see. I anticipate a break. If you get that break, right, we're going to see that break, retest, and then boom, straight down. It's going to be just a bloodbath. Going into VIX, what's happened here? Everyone's been talking about VIX. Where's the key indicator? How do we know when we're entering bearish territory? Yada, yada, yada. This is the 4-hour time frame. Over the past, basically, since mid-June, you've been in a downward channel on VIX. Surprise, surprise. The day you start to really look bearish and to where bears start to take control, the VIX breaks out. Now you're into this area. We didn't get to the $18 area we wanted, but you're in this area to where you can start feeling more comfortable with entering some of these short positions. But I want to address, I would not be overextending into downward short positions until the Fed meeting, or actually, Jackson Hole, and until you get GDP. Before that, it's very dangerous, so be careful. But until Thursday, I expect some downside or chop. I don't expect a lot of love on indexes. Now, I'm going to go into some of the stocks I'm liking. I wanted to keep this pretty quick, but before we do that, we got to cover J&K as well. So J&K, DXY, some of the fundamental stuff here. J&K, another day. We've been talking about this. Gap down, gap down, gap down, gap down. People keep telling me. Someone in Discord even said it. They're like, look, J&K is getting some love. Guys, stop looking at the micro level of this. Look at the major move. Unless you're starting to fill this gap or push back up, J&K does not look good. DXY, the dollar. Boom, the dollar, you're back. What did we say? We marked out these key levels down here. We had 1, then 2. This was your monthly, I do believe, right here. Yeah, very close to last month's level. You came down to wicked, touched it. Instant bounce. It took you roughly 4 to 5 weeks to get to this low, and it took you a week and a half to reach back to those highs. What does that tell you? Inflation is real, people. Inflation has gone nowhere. Now, again, you're saying, well, Tyler, I thought you said GDP was probably going to be good. I anticipate GDP will probably be flat to decent. I don't think it's going to be terrible. So I want that to be addressed as well. So when we look at all these indicators, and then we go over and look at yields, which we haven't looked at in a while, they're pumping right back up, people. They're going right back to their highs. They're pushing right back. You never really lost anything. You look at the inversion. You're still sitting there. So this is what I was saying the whole time we were moving up. I was like, short term, I like the upside. Long term, we're still probably looking very bearish. Look at our inversion chart. This has literally been the lead indicator before any type of recession in the past 40 years. Go back, look. Before we had any type of downward, and people, I already know you're going to comment if you're new here. 2018, we should have had a recession. We should have had a pullback. However, Trump got the economy stimulated by spending. He got the economy spending without using really any help from the government. Now, that was an interesting tactic, and it worked. But the worst thing that happened was COVID happened, and that put us into a very bad situation. Housing bubble. Last time you were here. Before that, your .com bubble. But the key thing to know is here, look how fast you pumped up here compared to every other type of recession. And guess what? You're following that trend line. You're still pushing up. Yields are still wanting to invert. And guess what? Another bull flag. Looks like you want to push back even higher. That's what I'm looking at here. These are the fundamental viewpoints. And I'm telling you, they have not gotten any better. Now, let's go over to the stocks I'm liking. First up, we're going to look at U.S. oil and look at the barrel. I want to be very quick and get to this really quickly. So I've been talking about this for a few days. Now, we're going to look at that here in a second. When we look at oil, it's probably the best chart on the market. But I want to show you something very closely. I want you to really pay attention here. This is oil. Okay, you're in a clear descending wedge. You topped out here. Now, stay with me. I'm going to add the SPY to this. So just watch what happens here. Tell me if you notice something, and tell me why no one else is talking about this. It's because majority of people have no idea what they're talking about, people. Now, these are your 2021 highs on oil, and you're bouncing at that level. That's why I started buying oil. I'll tell you my position in a second. But when did SPY bottom? It's bottomed right here, June 20th, give or take. When did oil top out? June 15th, going to June 20th. Boom, you tank. what happens during this period? It's the exact inverse of the formation as well. You have a rising wedge and you have a descending wedge. As SPY starts to drop, guess what happens? Oil starts to go back up. What's happening? I've been telling you, there is a crisis right now in Europe, and it is going to leak over to us. And what happened today with Europe? If we go to the euro to USD, guess what? The euro is officially cheaper than the dollar. Congratulations. 99 cents equals 1 euro. The first time in 20 years. We have this, actually the second time in 20 years. The first time happened back here in July. It was a quick wick down. You pop right back up. Europe is desperately going into a recession. And I'm telling you right now, if Europe gets hit, if China gets hit, if Japan gets hit, guess who else is probably going to get hit? We are going to get hit. That's why I do not believe a bottom is quote unquote in yet. Okay. Go back to my previous videos. I've been saying all this. I've been saying, look, short term, we got to play the bounce. We got to make money day trading. But guess what? We're not out of the bottom yet. So coming back here, what am I looking at? So I traded USO. This was the one that I traded because I wanted something that followed the barrel. Because even though the barrel is down, look at some of these stocks like Exxon. They bounced a long time ago. Look at Oxy. They all started bouncing. And if you've been here, then you got into Oxy a little bit earlier as well. I mention all these stocks all the time. But I got into USO. So I grabbed $78 calls. I grabbed some on Friday, grabbed some again today. Those are up 50% once again. Congratulations. I literally made a post on Twitter. It's one of the easiest trades. You opened up down here, guess what? I just re-added more. It was very simple. You break out of this level, it's going to get crazy. And guess what? You are going to follow the barrel to a T. Because you look at any other oil stock or index, guess what? They're not following the barrel down here because they're actually bullish. Oil companies are the most bullish companies right now. So USO, that's my position. I'm going long here. I have it for like mid-September. That's what I'm looking at there. Second position I have is Amazon. Now, Amazon, it was definitely a riskier play, and I was very clear with Discord. I got into this play. What I was looking at here, you were sitting, in my opinion, in a bear flag right here early in the day, and then I just kind of held throughout the day. I didn't really care. I loved the position. I just liked it so much. So you're sitting there, you're making lower highs, and you really made lower highs for the remainder of the day, which I loved. And you continue to sit on this pattern. You're just lower and lower and lower. After hours are popping up, but I don't really care about that. So I'm targeting the 130 level. Now I'm targeting around the 125 level. The 4-hour chart is going to tell you everything you need to know. Clear gap. Sitting right here, 130.8. I'm anticipating that at least to get touched. After that, you have your clear daily gap all the way down here to 122, 123. I was also telling people in Discord, you don't just blindly trade gaps, people. You don't just see a gap on a chart and say, okay, we're going to go that way. You wait till the trend changes, and then you start targeting those key levels, right? So even on the conservative side, I'm targeting 130.8. That's what I'm looking at here. You have more downside, and I'll keep you guys updated here as well. After that, I'm going to cover Tesla because I know everyone here loves Tesla. I think right now it's almost in a no trade zone. You're sitting all day, in my opinion, almost in a bear flag, but you're trying to make, a push if you can. So it was actually one of the most bullish stocks on the market on the day. But it's just in this no trade zone. I'm not interested. If it gets below 840, that's where I like it. If you can get above 885, 886, you can look for the touch of 904, 905, trim some, and then target that 940 level if you start to bounce on the economy. But it's all just dependent on what's happening right now. But in between this range here, all the way to 885, I would not be touching it. Down here, it is just a chop fest. I am not interested. Maybe at 840 if you want to get a long position down here. But if you start getting the rug pulled across the market, guess what? You're probably going to get taken with it with Tesla. Last up, I'm going to cover Nvidia. This is the one that Jay took today, and I still believe it's a great play. So Nvidia, in my opinion, you have a lot of downside here. If we look at what's happening, Nvidia has earnings on Wednesday. I would not hold through earnings. Just don't like it. But Jay started grabbing when you came out to the downside and then started flagging here. He started adding his position, and those just continued going down. You have downside to 168.5, and then from there, I would be targeting the key level about 165.8 down here. You still have a lot of room here, and AMD had okay earnings, but the semiconductor industry as a whole is getting hit right now, and there's a very big drawdown for the industry as we speak, specifically on this dip. They just haven't been getting the love that they were getting previously. Remember, you had that dip here when Nvidia had to lower their overall outlook, and then another analyst came out and said their outlook's probably going to go down as well. So right now, I'm looking at that downside pressure into Wednesday, and then after Wednesday, we'll play it by ear and see how the market moves because we don't know how GDP is going to come out. This is my overall viewpoint, and this is what I'm looking at. And before I let you out of here, once again, I almost forgot, looking at SPY, looking at the order flow of what's happening. Look at SPY. Nothing but bears. Nothing but bears. QQQ. What about here? Nothing but bears. What about VIX? Is that bullish or bearish? Nothing but bulls. VIX going up is bearish for the economy. SPX. Pretty interesting. SPX has a little bit of love, not gonna lie. And the biggest positions are calls. Very interesting. Besides that, but these aren't sweeps. Sweeps are very aggressive, where splits are down the middle, and then obviously blocks are the most conservative. That's gonna wrap the video up. If you have any questions, comment down below. I'll try to get to your comments as soon as possible. See you tomorrow.